next topic that we would be looking at is going to be my joint products and byproducts, and let's try understanding what's a joint product and a byproduct. When I say a joint product, right, a joint product, what happens? You have going to be using one raw material, and the output you would have two products, and to call it as a joint product, what happens is both of them will have market value which are more, which is going to have market value which are going to be both in a similar nature. Now let's say when I'm talking of a crude oil, you know that crude oil is actually a raw material for both petrol as well as diesel, and both of them have a come from the same raw material, and both of them have a very similar marketplace. Now when we talk about a byproduct, what's the difference between a joint product and a byproduct? Under a byproduct, you will have same raw material which is going to give production to two products. One will be the main product which will have higher market value, another one will have a very small, or we say negligible, market value. Are you clear? Clear with the differences between joint product and a byproduct? Now, what is that we will be learning in the question or in this particular chapter? See, in both the cases my raw material is same. This same raw material will get split into two products. Let's say product A and product B. Sometimes this might require further processing or it might not require further processing. Now if I have to understand the cost of A, it should have the cost what is incurred specifically for A plus some portion of the raw material cost. Yes or no? If I am trying to find out the cost of A, I would have to incur specifically whatever I have incurred plus some portion of my raw material cost, because that put together becomes my total cost of A. Yes or no? Now what we will be learning in the chapter is, see now how does it work? Let's try understanding process costing. In a process costing, what was happening? There was direct material, direct labor, other overheads which was becoming output for the next process. Correct? Till now my process costing had one input and one output. In a joint product and byproduct, it will become two outputs. Therefore this cost gets divided in some ratio, and this chapter is all about learning ratios. Guys, are you clear till now? So this chapter will only be about learning ratios. What are the different ratios that we will be following for the making sure that this common cost is going to be divided between the number of products I will be producing. Are you clear? So what I was saying is, this chapter is majorly about how are we going to be finding out the cost and the way we are going to be dividing the common cost into different products. So this chapter is purely about ratios. So you have to learn about what are the different kinds of ratios that we'll be using. Are you all clear till now? Right? So let's just try understanding first thing. Let's go back to the definitions and then we'll come back to the questions part. What is a joint product? A joint product represents two or more products separated in the same processing operation, usually requiring further processing. Each production in such portion, no single product can be designated as the major product. So I told you in case of petrol and diesel, both of them are equally my big products. So I cannot differentiate, and it is coming from the same process operation. That's what I was telling you. My first stage of raw materials, labor and overheads is going to be incurred commonly for both of them. Clear? Whereas byproducts are defined as recovered from the materials discarded in the main process. That is, it does not have too much of material value compared to the main product. So there are different methods that we will be using for the purpose of dividing this cost. 1, 2, this is not there. This and this work very similar, and so we'll be learning totally 2 methods in this and 4 methods in this, 6 methods. So in your exam question, what happens is, I'll just tell you guys what your exam question would generally be. They would be giving you process costing. So under the process costing, if you remember, we do direct material, direct labor, direct expenses and overheads. This will now go to product 1 and product 2. So I am only going to be teaching you guys today how are we going to be splitting this across to product 1 and product 2. Then there is going to be product 1, then there is going to be product 2 ledger. In product 1 you will have it from process 1, then you will have your direct material, direct labor and overheads, which will become the sum total of the finished goods. Same thing, one portion of this is going to become my process 1, then again it will have its own direct material, direct labor and other expenses, that will become the finished goods. Are you guys clear? Right? The first method what we will be following is known as physical units method. Now, what does the term physical units mean? Physical units, units means number. So what happens is, depending on, let's say, the number of kgs or let's say number of units what gets produced, whatever cost has been incurred I try dividing them into both the process. Physical unit means what? Trying to use a physical base. It can be weight, numbers, output, anything. So let's try, see this question carefully. A Coke manufacturing company produces the following products by using 5,000 tons of coal at 1,000 per ton in a common process. So what is happening here? My raw materials is basically what? Okay, 5,000 tons. Now at a cost of 1,100 per ton. Okay, so this is what I am spending my money on. Now what are they saying? This 5,000 tons is actually giving me 3,500 tons of coal, 1,200 tons of tar, then 52 tons of sulphate and 48 tons of benzol. Now guys, do the total of all of this. Check, do you get 3,500? Do the total of this and check, are you getting your output is, you are putting 5,000 input and your output is 4,800. So input and output not matching, right? That means what? There is a loss of 200 units, correct? Yes or no? Now this loss of 200 units, I will try dividing between all the 4 products, maybe in the ratio of their outputs. That is, for Coke, right? So Coke, see, 3,500 is my output, right? Multiply by 200. Same thing, that is, I'm just doing the sum total of each of it and then putting it across. Then the second one is tar. Then I have and last one is my benzol. Yes or no? So how much does each of them come into? First one comes to around 146, second one 50, third one 2, and the last one 2. So my loss of 200, because at the end of the day, like I know my input and output should match. Now see here how I do it. I have my output, Coke, tar, sulphate, right? In this, my wastage 146. So my net weight is basically 3646. So totally comes to 5,000. Are you clear? Guys, clear till here? Now, what is the common cost I am incurring? The common cost I'm incurring is basically the purchase of coal, which I'm purchasing how many tons in the question? I'm purchasing 5000 tons at 1100. Therefore, what is going to be my cost? Correct? 55 lakhs. This 55 lakhs cost, I have to divide it between all the 4 of them in this ratio. So, for the first one, it will be 55 lakh into 3646 divided by 5000. So, do it, how much do you get? 55 lakh into 3646 divided by 4010,600. Next one. Thirteen lakh 75,000, 59,400, are you guys clear? And the total should be matching with 55 lakh. So, if you see what is a physical units method, basically I am taking the complete units and trying to divide it on that ratio. Are you clear? So, guys, under the first one, so basically you need to remember this. If they say based on the physical units, what you will be doing is you are going to be taking the total cost whatever has incurred in process 1, and based on the output you will be dividing it. This is the first one. So, this one not too much of a drama, basically the number of units. This is typically given in most of your exams where you don't have too much of drama with regards to the calculation. Now, let's come to the second method. This is a little trickier, but I'll try explaining you guys the concept clearly. Just focus on what is the concept trying to say, so it becomes more easier in terms of your learning. The second one is called as, remember this, net realizable value at the split off point. Now, what do we mean by net realizable value as a concept? Net realizable value basically means sale price minus cost of sale. This is known as net realizable value. In general, if you would have known about your inventory definition, net realizable value definition under the inventory is basically what? Your sales value minus your cost of sale, that is any cost incurred to, or we don't even take this, we say sales minus any cost involved to make a sale. It's not the cost of sale, it is any cost involved to make a sale. That can be your selling and distribution cost. Okay. Now, what happens in case here? Here they want you to find net realizable value at the split off point. What does it mean? See guys, I want you to understand this. Let's say I've spent 10,000 rupees. I've spent 10,000 rupees here, and this was divided between two products, let's say in the ratio 6,000, 4,000. You incurred additionally 4,000 expense here. So, the product cost is 10,000. Here you incurred additionally 3,000. The product cost is 7,000. You wanted to make a 2,000 rupees profit. So, you are trying to sell it at 12,000. Here you wanted to make 3,000 and you wanted to sell it for 10,000. What is net realizable value at the split off point is the question in this entire thing. Guys, did you understand this entire split what I have done? basically you are having one common cost which gets split into two products, and then you are going to be incurring additional cost. Let's say this is selling and distribution cost, this is my profit, same selling and distribution cost and the profit. Now in this question, what is going to be your net realizable value at the split off point? And what does this net realizable value at the split off point means is that when you are trying to divide your common cost into both the products, whatever you think is the selling price at that point, that is how much would you get by selling it, that becomes my net realizable value at a split off point. So I want, see, if I have two products A and B, which is a completed product, let's say you are having petrol and diesel, is it easy to find out the cost of petrol and diesel? Let's say the selling price of petrol and diesel. Is it easy to find out the cost of petrol and diesel? Yes, because it is a ready-made product. Now my objective is not to find the final product as selling price, I want to find the realizable value at the split off point itself. So what I do is I try going reverse, because I need to arrive at this price, that is 6,000 and 4,000. So what I do, see here, I'll take the sales value, from that I reduce my distribution margin, that's the profit margin, then any selling and distribution cost or any separate cost what I've incurred, so I'll end up getting here. So basically I'm doing is the reverse calculation. Did you guys understand this? Did you guys understand this? Now read this question. Guys, done reading the question? Now let's try looking into it. An entity incurs a joint cost of 64,000 in producing two products A and B, earns a sales revenue of 86,000 by selling 170 per unit of A and 260. So that means what is my sales value? There are two products A and B. What is my sales value? For A it will be 170 into 200 units. For B it is 260 into 200 units, right? How much do I get? 34,000 and 52,000. This becomes my sales value. Now the further processing costs are 4,000 and 2. I have to find what? Realizable value at the split off point. These are what? The additional costs which are incurred. So I should be reducing it less. Is there any profit margin given? Is there any profit margin given in the question? No. Is there any selling and distribution cost given? No. So that means this becomes my net realizable value at split off point, which is 30,000 and 20,000. So therefore my common cost, what is the common cost I have incurred? I have incurred a joint cost of 64,500. This I will divide it in the ratio of 3:2. This I will try dividing it in the ratio of 3:2. That will come to 38,700 and 25,800. Are you clear? Now the third method is actually very simple. They are talking about the market value at the point of separation. So when you are trying to split your product, right, whatever is the market value at that point of time, that shall be considered. So let me directly take a question and then try understanding the difference between the. An entity incurs a joint cost of 64,500 in producing two products A and B and earns a sales revenue of 86,000 at 170 per unit and 260 per unit. So if you look into it, see, my joint cost till now is 64,500. Okay, and out of my total revenue of 86,000, so I am incurring 64,500 out of 86,000. So that means there is a 75% of the my 75% becomes my multiplying factor. So what I do, whatever revenue I have achieved, 34,000, I multiplied by 75% and again 52,000 multiplied by 75%. So in this particular question, what we are trying to do is we are trying to just take in, see, for an example, I know my total revenue is going to be out of 86,000 and I have incurred a joint cost of 64,500 till now. So I know that 75% of it is basically out of my pre-separation cost, right? So whatever revenue I have achieved out of both the products, I am assuming that 75% of the product was done at the pre-revenue stage itself. So I just multiply with that. So that's why if you see my total revenue what I am making here was 34,000, out of which I have taken 75% to be my split off point ka revenue, and out of this 52,000 I am taking it as 75% of it. Okay, the next one is they are asking, and this is the one we generally use it in the real life too, market value after further processing. That is, when I'm Priyanka, multiplying factor is basically done by taking the cost, joint cost divided by the total sales revenue. Now when I am talking of the further thing, which is basically further processing, I am talking of the end product. See, I want you guys to please read this question carefully, and then we'll come back to the only the question carefully, read it, because this is where students get confused with what are they trying to say. A entity incurs a joint cost of 6,500 in producing products A and B, 200 units, and earns a revenue of 86,000 by selling 170 per unit of product and 260 per unit B. Looks very straightforward. Now read this example with it. If the sales prices of A and B after processing are 200 and 300 respectively, that means what? In the previous question, the cost of A and B given were at the point of separation. Here they are talking of after further processing. Are you clear? Did you guys understand? Now in the exam, as a student, I generally get confused with it. How do I go about it? That's why I'll do one question which has all the things, so that when we are doing a full-fledged questions tomorrow, you guys would be able to understand. Now see, here the base of apportionment. So they are telling you are going to be making 200 and 400 revenue. So I know the number of units I'll be selling is 200 and 200. So I'm making a revenue of 40 and 60, right? That means my ratio will be what? 2:3. So my 64,500, the joint cost has to be divided in the ratio of 2:3. Now again and again, I want you guys to just keep remembering this, that I have a common cost, and the whole chapter talks about how do I divide my common cost? How do I divide my common cost? It's not about anything else, it's just whatever I'm doing is trying to find out the ratios. Now, in a layman term, if you have to understand what are the methods I did the first one was physical units. It's basically based on either the number of units or the weights. The second one I did was my net realizable value at split off point. As split off point. So what did I take? I took the total sales value. From that I reduced my profit and the common cost. Then the third method I did was market value at split off, and the last one is market value after separation. Are you clear till now? This one will be doing another method also. I'll be teaching you a little while because there are different ways of doing it. The last one is the average unit cost. The moment I say average unit cost, what does it mean? It basically means you are going to be trying to do it based on the total cost incurred. Total cost incurred. Now, let's try taking one question and try understanding all the methods what we have done till now, and also try teaching about the average cost method. Now see here, I want you guys to understand the questions carefully so that it becomes extremely easy when we are trying to solve everything. And this is a very easy chapter guys, 6 to 8 marks, and if they give it along with process costing a 12-mark question, trust me, extremely easy. So they are saying A, B, C are using a average unit cost method from the following data. Pre-separation cost, that means I have to divide this between A, B and C. Are you clear till now? Right? Now average unit and physical units actually are more or less, if you look into it, same. What happens is you take your total cost at the, that is called as my joint cost. I'll take my joint cost. What is my joint cost? 60,000. I divide by the total units produced. I'll divide by the total units produced. What is the total units I have produced till now? What is the total units produced till now? Is 1000 units. Therefore, my average cost per unit becomes 60. My average cost becomes 60. Now what I do, with every unit I produce, I multiply it with 60 so that I end up getting my total cost. So in this logic what we follow is that every unit is going to be absorbing the cost equally. Are you guys clear? Are you guys clear till now? Okay. I am teaching one concept from the chapter called marginal costing. From the chapter called marginal costing, a concept called as contribution. Now what is this contribution? What does it mean? We'll be looking into in the marginal costing chapter. Right now let's just understand contribution means sales minus variable cost. What does contribution mean? Sales minus variable cost. Under the next method, what I'll be doing, what we do is, out of the joint cost whatever I'm incurring, see here, when I'm trying to produce a product, there are going to be two costs. One being your fixed cost, other one is the variable cost. Now what I do is, variable cost I will divide it based on the units. variable cost, I divide it based on the units produced. Once I find the variable cost, what I will do, I will take up my sales and reduce my variable cost. Once from the sales value I reduce my variable cost, what do I get? I learnt it, sales minus variable cost is what? Contribution. So I'll get contribution. So I'll find contribution for all the products, find out the ratio, and based on the contribution ratio, I will divide my fixed cost. Are you clear? Are you guys clear? So let's try understanding this question. Find out the cost of joint products A and B using contribution margin method from the following data. So they are asking me to find using the marginal method, sales value, joint cost, variable cost. Marginal cost also means what? Variable cost. So first thing, what did I say? My variable cost will be divided based on what? Based on what shall I divide my variable cost? Based on the number of units produced, correct? So 4400 for A, number of units produced is what? 100 divided by the total number of units, 220. So that comes to 2000. For B, it will be 4400 into 120 divided by 220, right? Now what did I say? I have to find contribution. How do I find contribution? Sales minus variable cost. A and B. What is the sales value? 100 into 600. How much does it come to? 100 into 660, 6000, and B 120 into 30, 3600. From this I will reduce my variable cost. What is the variable cost? 2000 and 2200. Therefore, what's going to be my contribution? 4000 and 4000 and 1400. Okay. Sorry, this was 2400. Okay, sir. Sorry, sir. Sorry, madam. Sorry. Thanks, Nivedita. Sorry. Guys, are you clear? So, my fixed cost of 3900, I'll be dividing it in the ratio of 40:12. That will be 3900. So the joint cost is going to be divided, if you look into it, for A it will be 3000 of fixed cost and 2000 of variable cost, totally 5000. Guys, are you clear with all the methods? Now let's do one question which is completing all. Let's read this question. Guys, is the question visible? Okay, everyone read the question carefully. Guys, done reading the question? Okay, let's just try going one by one. Inorganic chemical purchase salts into more refined products such as caustic soda, chlorine, and PVC. In the month of July, chemicals purchased salt for 40,000. Conversion cost of 60,000 were turned up to the split off point. So, what is the common cost incurred till now? Yes, what is the common cost incurred till now? It is 1 lakh. Uh, Conversion cost blah blah blah. July production and sales were as follows: caustic soda 1200, 800 and 500, sales ton 1200, 500, selling time. All the 800 tons of chlorine were further processed at an incremental cost of rupees 20,000 to yield a 500 tons of PVC. There was no beginning of inventories of blah blah blah. There is an active market for chlorine. We could have sold all of its July production of chlorine at 75 per ton. Show the joint cost of 1 lakh could be apportioned between all the three. First one, sales at the split off point. Okay, everyone, I want you guys to understand this. What is the two products which are coming out of the salt? What is the two products which are coming out of the salt? Is it caustic soda and chlorine, or is it caustic soda and PVC? Caustic soda and the chlorine, right? Now I am trying to find the sales value at the split off point. Now let us try understanding, do I have information of the sales value of the split off point? See here, below the table there is a question which says all 800 tons of chlorine were further processed at an incremental cost of 20,000 to yield 500 tons of PVC. That means if you process chlorine further, you will get 500 tons of PVC. There is no beginning or inventories of caustic soda, chlorine or PVC. The active market for chlorine could have sold all of its production at 75. That means what is the selling price at the split off point then? Is my 75. So see here what I do, I take my sales value 1200 and chlorine 800, multiply by my selling price. I get the sales revenue of 60/60. That means it should be divided in the ratio of 1:1. That will be 50,000, 50,000. Are you clear? Second one is the physical unit method. What is the physical units method? How many units are there? 1200 and 800. That means it's going to be in the ratio of what? 6:4. Are you clear with the second one? Let's come to the third one. This is where a lot of students do a mistake on estimated realizable value. How do I go in with the estimated realizable value? See, I told you I take the sales, complete sales. If I take the complete sales, what happens is, see here, my 1200 units, are sold at 50, and my chlorine ka last sale value is what? 500 into 200, which is basically here would be 60,000 and here would be 1 lakh. Do you know profit margin? Guys, in the question, do you know the profit margin? No. Do you know any cost which is incurred post split off point? There is only one part of the question which says there is an incremental cost of 20,000 to yield 500 tons of PVC. That means at a chlorine you are incurring a 20,000 rupees of a cost post split off point, correct? So there is nothing for caustic soda, therefore it will become 60,000 is to 80,000, right? So I'll be dividing it in the ratio of 3 is to 4. That 1 lakh shall be divided in the ratio of 3 is to 4. That will be 42,857 and 57 143. Guys, again and again I'll tell you, remember this, what is estimated realizable value is, see, I would have done products, these products before the split off I would have incurred some expenses and then I would have arrived at a selling price. So I have to go reverse of it and arrive at this particular point. Are you clear? Okay, the next question what we have is a management accounting question. Let's try understanding what are they saying. Lifetime swimming pool product offers to purchase 800 tons of chlorine at 75 per ton. Explain whether you have to accept this or not. Okay, when a question like this is given, what do? How do you go about answering this question? Should I further process or should I sell at it? See, if I further process, okay, I'll be getting what? 500 units at 200 rupees. Sorry, 500 rupees for 200 units. If I sell now, I'll get 800 into 75. Correct? If I do 800 into 75, how much do I get? 60,000. If I do 500 into 200, I'll get 1 lakh. Now, guys, everyone see here, if I go and further process, I'll get 1 lakh. If I am selling now, I am getting 60,000. Should I further process or should I sell right now? Okay, everyone, you are wrong with it. Before I take this further, what you need to understand is, boss, to earn this 1 lakh, am I going to be incurring additional cost? Is the question. To earn this 1 lakh, am I going to be, what is the additional cost I'll be incurring, Narmata? I'll be incurring 20,000. Therefore, I am earning only 80,000 more, not 1 lakh more. Because to earn 1 lakh, you have to spend 20,000 more on further processing. But now I will compare. Now I will compare 80,000 and 60,000. Which is better? First one. Therefore, I will process it further. Are you clear? Are you clear? Okay. Now the last one, you need to understand how are we going to be apportioning the joint products. Now the methods are the same. One, the method of apportionment of joint products to the byproducts. One, either we do the net realizable value, standard cost and technical estimates we will not be using. Comparable prices that we try taking, because byproducts are the wastages which has some market value. So I try finding the comparative price of the byproduct, and the last one is if it can be used for further processing, what would be the price of it being used. So byproducts you don't have to break on it, break too much of it, because it's typically like the way we have done our joint products. But what is more important is how are you going to be treating the joint products. Since joint products is of a very lesser value, since joint products is what of a very lesser value, what we do is we treat the joint, sorry, since the byproducts is of a lesser value, what we do is we treat the byproducts as a normal loss value. That is, any money I get by selling the byproducts, I will be reducing it from the total cost. This is method 1. I will take the total cost minus whatever is the value I am get by selling the byproducts, I will reduce it. This becomes my total cost, which I will divide it for the products, like the way we do it for the normal loss. Are you clear? Guys, are you clear? We did it for the normal loss. Then there is a second method. The second method is, let's say the byproducts are having more value. That is, it's not like 100 rupees, 1000 rupees and all. Let's say it's lakhs together. What I do is, I try treating them like a joint product then. I try treating them like what? Joint product. The moment I treat like joint product, I have all the 6 methods which comes into picture. That is, either I can go with physical units or net realizable value or market value at the split off point or market value post separation or the contribution method or the average unit method. You can go any, only when your byproducts have a considerable value. The last one is, if there is a, if this byproduct has to be required, let's say, guys, here I have 1 unit, this is going to become my joint product and I have a byproduct. Now this byproduct, I would always assume that I can sell it right now. Let's say it is not in a position of selling, you have to further process it. You have to further process it. Okay, if it requires further processing, you cannot sell it at the point of split off itself. Then what I will do, I will do the net realizable value. What is net realizable value? Basically take the sales minus my profit margin minus the split off cost. I'll take it. Once I get this from the total cost, I will reduce this split off value. I will reduce this split off value, then I will allocate it to the joint products. Guys, I'll just tell you one more time, remember this. For most of your exam questions, byproducts will have a sales value. So from the total cost, reduce this sales value of the byproduct value. Reduce the sales value of the byproducts value. Once you reduce the sales value of the byproducts value, right, you get the total cost which I can allocate it. Now here there is 2 methods. One, I have a byproduct which can be sold as it is. Some second part is it can be sold after further processing. If it has to be further processed, you have to find the NRV and then you will be reducing not the sales value but the net realizable value here. Are you clear till now? Are you guys clear till now? Done? Guys, go back, read the questions. I'll send you guys some questions to solve now. Not, like I said, it's just read the theory again, how it has been calculated. Solve the questions, and tomorrow we'll complete both the joint products and byproducts as well as the process costing, the practice questions what has been given. We'll discuss that tomorrow so that we are done with all the process costing chapter. So we'll be starting off with budgeting, marginal costing and standard costing. That's the next set of units. Then the following week we'll be doing the remaining questions that is based on your integrated and non-integrated accounting. Are you clear? Yeah. So see you guys tomorrow then. I'll just send you guys the question in some time. Thanks, madam. Thank you so much. So see you guys.